Baker Hughes is one of the world's largest oil field services companies, providing equipment and technology to the energy industry. But the company is also undergoing a major transformation under its new CFO, Nancy Bees. Bees joined Baker Hughes in November 2020, after serving as the CFO of Newmont Corporation, a leading gold mining company. She brings with her a wealth of experience in finance, strategy, and sustainability. One of Bees' main goals is to change how Baker Hughes returns cash to its shareholders. In the past, the company relied heavily on share buybacks, spending billions of dollars to reduce its outstanding shares and boost its earnings per share. But buybacks have been criticized by some investors and analysts as a short-term tactic that does not create long-term value. Bees believes that dividends are a better way to reward shareholders and signal confidence in the company's future. She has announced a new dividend policy that aims to increase the dividend payout ratio from 15% to 25% of free cash flow over time. This means that Baker Hughes will pay out more of its cash flow as dividends, while still retaining enough cash to invest in growth and innovation. Bees says that dividends are more aligned with Baker Hughes' strategy of becoming a more diversified and resilient energy company. She says that dividends reflect the company's commitment to generating consistent and sustainable cash flow, regardless of the volatility in the oil and gas market. She also says that dividends attract a wider range of investors who value stable and predictable returns. By increasing dividends and cutting back on buybacks, Bees hopes to create more value for Baker Hughes shareholders and stakeholders. She says that this is part of her broader vision of transforming Baker Hughes into a leading energy technology company that delivers solutions for the energy transition. Baker Hughes has announced a significant increase in its quarterly dividend and a new authorization for share buybacks. The company will pay 19 cents per share to its shareholders, which is a 5.5% increase from the previous quarter. This reflects the company's confidence in its cash flow generation and its commitment to return value to its investors. In addition, Baker Hughes has authorized an additional $2 billion in share repurchases, which will allow the company to reduce its outstanding shares and increase its earnings per share. These actions demonstrate the company's financial discipline and its focus on enhancing shareholder returns. One of the key highlights of Baker Hughes' financial performance in the fourth quarter of 2022 was the record level of orders that the company received. Orders reached $8 billion, which was a 20% increase compared to the same period in 2021. This shows that Baker Hughes has a strong demand for its products and services across all its segments, especially in oil field services and digital solutions. The growth in orders also translated into higher revenue for Baker Hughes. The company reported revenue of $5.9 billion, which was an 8% increase year-over-year. This was driven by higher activity and pricing in oil field services, as well as higher equipment sales and software revenue in digital solutions. Baker Hughes also benefited from the recovery of the global energy market, which boosted its sales in turbomachinery and process solutions and oil field equipment. Baker Hughes CFO, Brian Worrell, said that the record orders and revenue reflect the company's resilience and differentiation in the energy industry. He also said that the company is well-positioned to capitalize on the opportunities in the energy transition and deliver long-term value for its shareholders.